You got a point in time where today is unsustainable because just like your business, right? You know how much it costs to do your job. You get competitors come in and guess what they do? Undercut you, right? And then you get more competitors come in and then you have to decide that, guess what? I can't do it for anything less than this. Well, insurance carriers do the same thing.
HOA Insights, common sense for common areas, exists to help all 2 million volunteer board members nationwide have the right information at the right time to make the right decisions for their future. This podcast is sponsored by 4 companies that care about board members: Association Insights and Marketplace, Association Reserves, Community Financials, and Kevin Davis Insurance Services. You'll find links to their websites and social media in the show notes.
Hi, I'm Robert Nordland of Association Reserves.
And I'm Kevin Davis of Kevin Davis Insurance Services, and this is HOA Insights, where we promote common sense
for common areas. Welcome to episode 23, where we'll be helping you figure out how your association can face the challenging task of paying for the sometimes significantly higher insurance premiums you'll be facing this year. I'm thinking especially of our episode 13 with board hero Gabriel Alberian, where in that episode titled Insurance Nightmare to HOA Victory, we heard what he was able to do in that situation. We want to encourage you and equip you to navigate successfully to the future, so we're glad you joined us today. If you missed any other prior episodes, you can catch them from the podcast website, www.commonareas.org. Take a moment after this episode to subscribe to this podcast from your favorite platform to avoid missing any future helpful episodes. And last point of business before we launch into today's episode, I want to remind you that if you have a hot topic, crazy story, or a question you'd like us to address, you can contact us at 805-203-3130 or email us at podcast@reservestudy.com. So Kevin, I know you get these calls all the time. What do you tell people to do about paying for higher premiums?
Thanks, Robert. And I heard that podcast, and it just, I've been hearing these stories so often, how we can't afford our insurance anymore. What can we do? We can't afford it. The rates are going up too high. And Robert, the answer is, it's a simple answer. It's something that nobody is doing the correct way. And that is you have to budget. You have to get the information that you need. Because we know from an insurance professional, we know what's going to happen. We know what's going to happen to your rates. So you're going to have to ask us. You have to go to your community association insurance specialist and ask them, what does our rate look like for the upcoming year? They're going to tell you it's going to be about 10 to 15% higher than it was last year. Then what you do is you budget for it. If you need a special assessment, if you need to increase your assessments, you have to do it. And there's your thing about budgeting, Robert, and you know, because you do this all the time and you tell people about the reserves and the roofing and everything like that, is you're going to have an insurance amount this year. It's going to go up again next year. So if you're paying, $30,000 now and 3 years ago you paid $10,000, well, guess what? It's going to go up a little bit more next year. So we see it. We know it. You don't have to guess. You don't have to sit back and wait until the moment you get that request in your hand and saying, your insurance is now this as opposed to that. You have to talk to us as insurance professionals and say, what do you think about the upcoming year?
Yeah. Kevin, it reminds me of, was it when the pandemic started, everything got unsettled and we're hearing these first stories about supply chain that became something we spoke about. We were at that point in time trying to replace a wood fence on the side of our house. And I figured it'd be $500 or something like that. It was pretty simple, pretty short. And I spoke to the fencing gentleman that we've used previously in the other prior years. And he said it was probably going to be $1,500 to $2,000. And it was just crazy. And I think in addition to pandemic type things, we've heard about high inflation recently. And I think it's just the reality that there are some boards that are hanging on to, we've had our HOA assessments at this level for this many years. We're proud of that. And on one hand, I want to say good for you to hold the line. But the reality is we live in an inflationary time period, and whether it's supply chain or Hurricane Ian or Champlain Tower South or any of these other things, it's going to affect insurance. And we have to appreciate that the reality is costs are going up and your assessments are going to have to go up.
And for insurance point of view, it's even more so because your insurance is based on what it costs to replace your condo association after it burns down. So historically, you may say, well, it costs $10 a square foot to replace it. That was maybe 4 or 5 years ago before COVID. So you're looking at your insurance over the past 15 and 20 years, they may be saying it's going to cost $10 a square foot, $10 a square foot. So your rate is based off of $10 a square foot. Now, all of a sudden, because of what you just said, it's now $13 a square foot. That means your rate just went up 30%.
Right. So it's not that the insurance companies are raising the rate. It's the underlying foundation that the cost of construction, the cost of doing things at the association, those have gone up. And the insurance is basically just a layer on top of that. So when the costs go up, the premiums to the client has to go up.
And the problem with insurance, what they've done is over this past 10, 15 years, the rates haven't gone up with the losses. So now losses have outpaced the cost of insurance. So that to replace that fired condo that burned down, we're looking at, oh my God, it is $15 a square foot. And we've been charging $10 a square foot for the past 10 years. And it's not, and so basically, and I know people hate to hear this, but they've gotten a good deal for about 15 years.
Yeah, Kevin, I'm trying to adjust to that because it's the common thing to blame the insurance company and to blame the insurance providers for the spiking rates. And now I'm having to almost want to spin in my chair and process that like any large organization or large industry, they've been slow to react and they got behind the curve themselves. What did it take for them to wake up? Just some more losses and they realized this is unsustainable?
That's the whole point. You got a point in time where today is unsustainable because just like your business, right? You know how much it costs to do your job. You get competitors come in and guess what they do? Undercut you, right? And then you get more competitors come in and then you have to decide that, guess what? I can't do it for anything less than this. Well, insurance carriers do the same thing. We write insurance, somebody comes in and undercuts us, they undercut us, and then all of a sudden, that $10 it costs a square foot to replace it, now we say, well, maybe it doesn't cost $10, maybe it costs $8, maybe it costs $7. The claims start coming in and we say, wow, now it's $15. And guess what? We can't afford it. And what happens when we can't afford it? You got State Farm, farmers not pulling out. You got all these people pulling out of the market because we can't afford to do business anymore under these conditions. So it's like, bam, it hit a wall. Insurance has been consistent and stable for about 15, almost since 9/11. 9/11 is the last time the rates have gone up. The rates you're talking about today hasn't been this bad in 40 years. When I first joined insurance, the rates were through the roof and then it gets leveled off. And then all of a sudden, but right now, you're looking at one particular thing, and that is the cost to replace a building. The cost is the number one reason why you're seeing a lot of these things raising right now, because we looked at $8, $9, $10 a square foot, and now it costs $13 or $14. And that's where that rate, 15 and 20% rate comes in. And we look at it again and again. How do we do that? And we keep saying to them, well, it's based on to replace your building. That's what it's based on. So, and that's where the debate always comes in. Wait a minute, to replace my home is going to cost, X number of dollars, but you want to insure for X plus one. And so that's where the debate comes into place. But it always comes in place when it's kind of late in the game where it's like, wow, we know how much it costs. We have inspectors go out there and say, all right, this is how much it costs to replace it. And it's kind of debates there. That's probably the biggest issue right now from an insurance point of view, is we look at something and says the cost to replace it has gone up. Insurance is not making money because just the fence that you just mentioned, the pair of roofs, all those things have gone up. So it's inflation is a problem, plus insurance carriers fighting over winning a piece of the marketplace, a share of the marketplace, rather than keeping their eye on the ball and saying, okay, because they saw it. We know for the past 4 or 5 years, since, 3 or 4 years now, that, the inflation is going in a different direction. And one more thing I want to add to it is that you have all the climate conditions that we have, all the fires and the hurricanes and the floods and things that we haven't seen. You had a 100-year flood every 10 years now. So you combine the two of those things together, and it's just, it's a nightmare for insurers to go out there and say, how can I insure this and still make money? And a lot of them are saying, we can't. And so we're done.
You know, speaking to you, it just reminds me how obvious this is. There was many years ago, I live in Southern California. We had an earthquake. The insurance company made us well financially, paid for the remodeling or the repairs that needed to happen in our house. And that company promptly was out of business a year later. And I thought, how can that be? They're a big insurance company. Didn't they know? And they had been competitive. And they'd been competitive. That's why we used their insurance. And all of a sudden they realized that desire to be competitive and keep their rates low just wasn't appropriate to offset the claim cost, and they were out of business. And that's, I guess, just business on another level. If you're trying to get a car wash or anything and you're not charging enough to sustain your business model, you're going to go out of business.
Yeah. And for insurance, it's unique because, you know, you look and we don't have a lot of claims out there, but they're collecting a lot of premium coming in, and people invest money too. You got investments in insurance because they are seeing that, you know, they're making good money until you're not. And all of a sudden you're not making the money, and all of a sudden investors start pulling out, and all of a sudden you realize that we can't afford to do business this way. Now you have a State Farm and a Farmers who has a ton of money. All they could do is say, I'm not writing anymore. If you're in a fire prone area, we're not going to insure you in that area because we can't make enough money in there. Or earthquake insurance. We can't make money in earthquake insurance, so we're not even going to do it. We're not even going to do this anymore. It is really, and I said this earlier, is that the insurance companies have gave everybody out there a good deal. You've gotten a good deal for 15 years, maybe close to 20 years. And now insurance companies are saying, we can't afford to do business this way anymore.
Wasn't it Warren Buffett who recently said, when the tide goes out, that's when you learn who's wearing a bathing suit or not? And I've probably misquoted that, but it's the same idea that when everything's going along just fine, there's no worries.
Yeah.
Until in the insurance business, there's hurricanes and wildfires, like you say, and more problems. Okay. So what do you do if you've waited because you cross your fingers and presume that insurance is going to be okay, a little bit more expensive than last year? We'll tuck it into a pocket in the budget. We'll make adjustments, and all of a sudden it's a big change. And insurance being a big line item, that is unsettling in your budget. What do you do in those cases where you haven't emotionally, physically, or financially prepared for that change?
And that's one of the problems right now, is that they haven't prepared for the change. So now that's what we're hearing about. We're hearing about special assessments, okay, which is hard because special assessments have to be approved. And a lot of people, when you hear that, well, we have a special assessment to pay for insurance, the first thing they want to do is go out for bid, get lower rates. It's too high. I have a friend that can get you a better deal, okay? So that's the first thing. You get a loan. We have people get loans on there. Now,
really?
Yeah. Oh, yeah. You get loans paid for insurance.
A multi-year loan for a year premium?
For first year premium.
Wow.
Which is, again, you got a problem because you got sustainability. So what happens next year? Yeah, then the year after that. You know, it's not sustainable. And that's where we're at right now. To me, the problem is that for us, there's been a 15% rate increase since the year 2000. Okay. So a lot of rates have gone up from whatever was 10,000 before is now, at like 15,000, and that's a 50% rate increase. Now you're looking at your budget now and go, wait a minute, what happened here? How come it's so high? And what do we do? Because now there's shortfalls every single year. And that's why that budgeting process is so important. You can go to your reserves. Some people are going to the reserves instead of, putting that new roof on. They have to pay for the insurance.
Yeah. Well, we see it, people talking to us in the reserve study business saying, you told us our roof would be $200,000 and it's not, it's $400,000. And I said, well, how old is that reserve study? They said, well, it's from 2018. I said, yeah, prices have changed a lot since 2018. And that's the cost of not staying current with numbers. And numbers have really changed in the last few years, and then from year to year to year. So again, what can you do? We have, like Gabriel Alberian, he talked about the combination of special assessment and raised increases. So maybe you spend all your insurance budget on that first portion of the premium. You buy yourself some time and then do a special assessment to get ready for the second or third payment. That's a strategy. I don't like loans. I'm okay with shopping, but shopping takes time. and you need insurance.
Well, let's talk about shopping, because that's one of the biggest problems that we have today. Is people think that there's somebody else has a magic wand. I have a friend of a friend of a friend who can do better than that. Guess what he did on my homeowner's insurance? There are not a lot of people who are providing coverage for community associations.
Are you part of a homeowners association or condominium board? Making the right financial decisions for your community's future is crucial. At Association Reserves, we're proud to serve communities nationwide, specializing in reserve studies tailored to your community's unique needs. Our expert team helps you accurately assess your property's assets, forecast future expenses, and develop a solid funding plan. Whether you're a small HOA or a large condominium association, we've got you covered. Visit reservestudy.com to learn more and get a proposal for your association.
Is there any magic solution out there, or is it kind of the same?
That's the problem. A lot of people believe that just because you get that higher premium, again, you went from 10,000 to 15,000, and we're saying that it's going to be a 15% rate increase every year. And the reason why, for what we just said, because the cost is higher. Now, the first thing what happens is that your board of directors, presents it. You have the unit owner saying, I have a friend, and get it lower. There are no magic wands out there. If you're dealing with a community association specialist, specialize in insurance for community associations, they know. They know what's going on. They know where to go to get the best rate and the best coverages. The problem is you can go to somebody and get a cheaper rate, but does it provide the coverage that you need? For example, you can save money by saying, I'm going to have a per unit deductible. So if there's a water leak, guess what? Each unit will pay $50,000 deductible. That way, guess what? The association is cheaper. Yep, your association's paying lesser rate. And you just said to yourself, ouch, right? Yep. And those are kind of things that a specialist will tell you, yes, I can get it cheaper, but guess what? It's going to cost more on that individual unit owner. And if they can't pay it, it's going to come back and create another problem. So yes, we can come up with ways to make things cheaper for you, but at the end of the day, is it the best course of action for you? And that's why you need that insurance specialist.
Right. It reminds me of one of our reserve study clients who were chafing at the funding recommendation that we made, and their response was they got either a precedent or their attorney to take the garage doors in their townhouse and make that individual owner responsibility. Therefore, the association didn't have to replace the garage doors or paint the garage doors or anything like that. And I'm thinking, that's crazy.
Yeah.
The garage doors are still going to deteriorate. You're still going to have to pay for them. And now every owner is going to have to do their own one.
Yeah.
And it's going to be more expensive because there's no economies of scale. Then you're going to have a problem with checkerboarding when they don't all get done at the same time.
And then you're going to end up with one thing. Then you're going to end up with one more thing happening there. Now you get a lawsuit out of it. You get a lawsuit because guess what? Your job is to maintain the association. 5 garage doors are messed up. 5 of them are looking nice. I mean, these things doesn't work in the long term. They don't.
Yeah, just doesn't work.
Yeah.
Okay, so speak to a specialist. How do you find a specialist? Hopefully you have a specialist you go to. Do you Google it? Do you check with your listing in your local Community Associations Institute, CAI chapter? Where do you find an insurance specialist who knows the 2 choices, the 3 choices, the good choices that you have?
Okay, guess what? There's something called a CIRMS. It's CIRMS. This is a Certified Insurance Risk Management Specialist. They specialize in community associations. So if you want to find a specialist, use that for number 1. But number 2, go to your community CAI and look in there. They have information there. Yeah, they have a directory there. They can look in there and say, I'm looking for an insurance specialist. You can Google insurance specialists for community associations. They come up all the time. But look for a CIRMS. They're the ones that are specialized in it, and they're the ones that will help you the most. They know what's going on. They will tell you that if you are continuing the way you're doing your business, if you're running an association this way, expect a 30-40% rate increase. If you want a 5-10% rate increase, these are the 4 or 5 things you should be doing.
Okay. I want to go back to a couple of things. What can you do? When I've spoken to you before, you've talked about there's kind of 3 things on the insurance side, and that's the amount of coverage, the size of the deductible, and what is actually covered. So exclusions. And you want to be careful with those types of things, because if you were a we spoke about before. If you're a lakefront condo and you have docks or a pool, those are different hazards than if you're a HOA and you have kind of nothing but just a tot lot. So you can play with those kinds of things, but you need coverage. Don't you need coverage for everyone's mortgages and for their well-being?
Exactly. And that's when it goes back to you need a specialist, because anybody can come in and say, listen, we're going to cover your buildings for fire. We're covering for any disasters. We give you liability. You got coverage. Okay. And it's a basic policy. It doesn't provide the things that you really need, because things happen more than your place burns down. I mean, there especially like slip and falls, and there's a lot of things that happen to that association that you got to make sure you have adequate coverage for. And again, like you said, the three things. You got to make sure the limits are adequate. And we're talking about what we call that right now. Is it $10 a square foot, or is it $15 a square foot? You can have somebody come in and say, guess what? I know a friend of a friend who can give it to you for $10 a square foot. So you're not doing $15 a square foot. Or don't worry about it. They'll never look at it anyway. So you have people who will manipulate the information in the background to get you a lower rate. Somebody who are, questionable people out there, because the people out there can do certain things.
Well, they're salesmen.
Exactly. And a salesperson can give you insurance that's cheaper, but it's not the kind of insurance that you need.
Well, for your building, they can sell you $10 million of insurance, and you may need 15 or 18 million or 20 million. And then there's a heap of troubles that come on that. But
when the claim comes in, that's when you find out the troubles. When the claim comes in and says, wait a minute, you lost 3 buildings there, but you insured all 3 of them under one blanket policy, and you did it wrong, and it's cheaper this way, but it creates a lot of headache for you. And again, we don't want you to be an insurance expert right now. We don't want to talk about a lot of insurance stuff, but we want to make sure you understand that if you talk to an insurance expert in community associations, you will get the best for your association. It may cost you, but you're getting what you really truly need, and you get options. Again, and right now the biggest option is that you want to go lower, you can put some of the exposures to the unit owner. You have a lot. Water damage is the number one problem you have in these units. The person who charged it, we may be able to put a deductible there. But it's not as simple as that, because certain states allow you to do certain things that documents don't. So it's not simple. That's why you need a specialist.
Yeah. And I hear this, my mom's voice in my head saying, don't be penny wise and pound foolish. And we're talking about tens or hundreds of dollars per unit, hopefully. And what it's doing is covering your thousands of dollars and hundreds of thousands of dollars of home.
Yeah.
So it might be more expensive, and it's going to be more expensive, but you put it in perspective, and there's some things that you just have to be able to afford. And there's only so much you can do. So it's a little bit, or we hear at a point where we say you have to grin and bear it, just grit your teeth and raise the money. Comes back to your first answer, budget. You budget. And again, at the end of the day, insurance is cyclical. It'll go back around the other side. If rates will start lowering, it'll get it a little bit better, and you'll be able to afford it again. And this conversation we're having right now, several years from now, it'd be like, what are you talking about? I mean, insurance is, by rate, I got a 20% discount. I got a 15% discount. You've been talking about discounts again. So it's cyclical. What we experienced after 9/11, the rates went up. Okay. And then it came back down. We experienced it again during 2008, 2009, when you had the crisis, the financial crisis. You had some issues there, but then since the 15 years, it's been stable, consistent, even though insurers knew that they're dealing with hurricanes and fires more than they've ever dealt with before, and they know they have not captured the right amount in terms of their square footage. They knew those things, but they wanted to keep what they had, and they kept it, and now today, we're up against this wall, and the wall it's a big wall, and we don't see it coming down for a while. Yeah, well, again, I hear a voice in my head saying, as much as there are some insurance providers that are leaving, I think we live in a wonderful country where there's competition, and that cycle will rebound, where there will be insurance companies that say, oh, that's a lucrative business. Let's get back into it. There's money to be made. So business lures insurance companies back in. We'll be back to competition. And I loved hearing you say that word discounts. There will be discounts. And I like the ability for the client to be able to be a factor in this. What can the client do? Can they maintain the building so they eliminate the leaky water that creates a slip and fall? Can they clear their brush away from the perimeter? Tell me what the client can do that will invite. Yeah.
This is it. And this is what's going to change everything. If you avoid the avoidable, okay? Avoid the avoidable. Certain things you can't avoid. If you live in the brush area, there's fire there. You can't complain because your rate is so high because there's a fire there. If you live in the hurricane area where wind damage or hail, you can't complain about it. If you live in a community association, high rise, it's unsprinklered. Okay, you're going to get dinged for it. You can't complain about that. Certain things you got to accept. That's the reality of the time. But if you are at a high-rise elevator, if you have a high-rise building, does the elevator work right? So it's a matter of, just because you're unsprinkler, if you can have the best well-run managed association, guess what's going to happen? You're going to bring people back into it. A perfect example is you have a lot of, like in New York City, a lot of unsprinkler buildings. Even California, you have unsprinkler high-rises. Well, guess what? You're not going to come in and sprinkler them, but you want to have a well-managed one where, the elevators, you look at the railings and you look at the garages and the balconies. You say, wow, just because they have a sprinkler doesn't mean it's not a well-managed association. And we're going to be the ones who are going to start writing these kind of coverages. And that's when the things start to go down. When you have people in there can look and truly underwrite and say, we can make money at an unsprinkler. We can make money at, even though if they live in the brush area and there's fires in the area, we believe we can make more money there because those homes back there are more protected than the ones that are not. So we can make money out of there. Once that happens, guess what happens? Now competition comes and say, hey, guess what? They can make money at unsprinkler buildings. We can make money at unsprinkler buildings. Well, they can make money in the fire hazard area. They can make money in the wind zone. They can make money, so we can make money in it too. And that's when it's going to go the other direction. So it's going to happen sooner than you think. It's going to happen in ways that somebody's going to figure out a way to do it where it's profitable, and then we will all follow suit. That's what happened every time we get into this marketplace where we hit the wall. Somebody comes in and goes, okay, what if we do A, B, and C? Boom. And then all of a sudden the rates come down. Then you hit that another boom. Then the rates come down, and that's how this works.
Yeah. I love the client being involved in the process. I love their ability to affect their own future. And, well, a lot of things I like about this. I like that you've been in this business decades, so you've seen cycles, so you know what you're talking about. I also like that the forces of competition, regular gold business competition in this industry or in this country, mean that just as some providers are shifting out or scared and reacting as a scared person would, things are going to settle down and competition will draw them back in and rates will stabilize. So, yeah, it's a wonderful country with a competitive business environment. Every once in a while that bumps us, and right now we're getting bumped, but it will settle in. But in the meantime, we've got to say, you've got to have the appropriate coverage. That is fundamental to your association. So get the appropriate coverage. What else can we summarize with? Make sure you're dealing with a CIRMS, CIRMS, Community Association Risk Management Specialist. Did I get that right? Feel free to shop around, but make sure you're shopping around with someone that knows what they're talking about. What else have we summarized?
The key thing, budget, 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 budget. There's nothing more important than to budget, because when you budget, it can be, when my homeowner's insurance rate went up, I live in a single family home. Guess what? I got to find money to pay for it. I don't have the ability to go out and ask my neighbors to help me pay for my insurance. Yeah. I can't go with that, a year ahead of time. Guess what? My insurance is going to go up for 20% because of where I live. Can you help me? And can I collect for my neighbors? No, I have to pay it out of my pocket. Boards of directors of condominiums have that ability to go out there and say, guess what's going on? We need to raise money to pay for our insurance for the coming year. We need to do it. And then you budget correctly, and all of a sudden, life is just a little bit better for you.
Yeah, it's going to be a little more expensive, but it's our community. We have to face the reality that inflation is real. Costs are going up. The underlying reason is the cost of construction.
It's all about how much costs to replace your property. And guess what? We're not getting enough money to replace the property right now. We're just not. And so we need to figure out a way to do it. And the best way to do it is by putting restrictions on your policy, putting higher deductibles on there, lowering their limit, taking some coverages away. But as a specialist, we have to make sure you get the coverage that you need and understand we're taking things away. This is what we're taking away. So you understand that now you are taking that responsibility, or a unit are taking that responsibility.
Got it. Well, thank you, Kevin. As always, it's great talking with you. That was great help. Across the country, we've heard insurance is expensive this year, unsettling many budgets. I wish we had a magic wand to instantly make things better, but it looks like we're going to have to be resourceful and move forward through this challenge. Things are going to get better. So make sure you subscribed on your favorite podcast platform in order to catch all upcoming episodes on insurance and other helpful and hot topics. We hope you gained some HOA insights from our discussion today that helps you bring common sense to your common areas. If you have a topic you'd like to have us address, a story to tell, or questions you'd like us to answer, please call 805-203-3130 or email us at podcast@reservestudy.com. We look forward to having you join us for another great episode next week.
You've been listening to HOA Insights, common sense for common areas. You can listen to the show on our podcast website, hoainsights.org, or subscribe on any of the most popular podcast platforms. You can also watch the show on our YouTube channel. Check the show notes for helpful links. If you like the show and want to support the work we do, you can do so in a number of ways. The most important thing you can do is to engage in the conversation. Email your questions or voice memos to podcast@reservestudy.com or leave us a voicemail at 805-203-3130. If you gain any insights from the show, please do us a huge favor by sharing the show with other board members you know. You can also support us by supporting the brands that sponsor this program. Please remember that the views and opinions expressed by the podcast do not constitute legal advice. You'll want to consult your own legal counsel before making any important decisions. Finally, this podcast was expertly mixed and mastered by Stokelight Video and Marketing. With Stokelight on your team, you'll reach more customers with marketing expertise that inspires action. See the show notes to connect with Stokelight.